This is exercise 34 in lesson 16, and this is a pretty short exercise. It's a retirement savings credit for Karen Wilson. It's basically to show you how a non-refundable tax credit works. In this case, it's the retirement savings credit. So non-refundable, remember, can be applied to the person's tax liability. But if the tax liability isn't as great as the credit, then the tax liability is paid off and whatever credit remains goes away. They can't use it. And in this case, that's what happens with Karen Wilson. Let me show you. So this was under deductions, just to show you what was entered to remind you. And under here we had adjustments. And under adjustments, we should find, here it is, traditional IRA contributions. And here's what we entered. It said we had $2,000 of IRA contribution made by the taxpayer. The taxpayer retirement plan, the taxpayer is not covered by a retirement plan. And so we checked that box. We know we were told that she was not covered by a retirement plan, so we put in her $2,000 contribution. And what was the effect of that? Well, let's go to the summary print. And they want us to look at in the exercise the 8880 form. So we're going to go to the return itself, generating the PDF. Let's print it on our screen, that is. And now we're going to go and look for the 8880. Sorry if it's flashing pretty quickly here. It's pretty far down. And next should be there it is, the 8880, credit for qualified retirement savings contributions. So it shows here in line 1 that you, in this case it's just a single return, contributed $2,000. And ultimately the amount that's pulled forward is $2,000. Here's her income. They're going to use a percentage to determine a percentage multiplier to determine how much of a credit she receives. Ultimately, in line 10, it shows as $1,000. That's what she is eligible for, $1,000. But it's line 11 shows limitations based on tax liability. Well, tax liability must only be $343. We're going to see that in a minute. So again, she's eligible for $1,000. She could use the whole $1,000 if she had $1,000 or more in taxes that she owed, but it's showing here that she's only eligible, or sorry, will only be able to use $343. So on line 12, it shows that that's carried over to Schedule 3, line 4, that 343. So we'll go over to Schedule 3. We'll go back up here to Schedule. Remember, it goes 1, 2, and 3 after the 1040. There's Schedule A. Here is Schedule 3. Schedule 3, non-refundable credit. And note on line 4, retirement savings credit, $343. That on line 8, it's combined with any other non-refundable credits. There were no others, so it stays as 343. And that moves to line 20, it says here, on the 1040. So if we go to the 1040, line 20, there's line 20. And what's the amount on line 20? 343. Why is it only 343? Well, here's the line on line 16 that shows, what her tax obligation is. It's only $343. So even though she was eligible for a $1,000 credit, she could only use $343 to reduce that to zero. So there's her tax liability after the credit has been applied. And that's as simple as that. It's just to show the impact of a non-refundable credit. In this case, she wasn't able to use the whole non-refundable credit. It's the end of this exercise.